Want to slash thousands off your home loan repayments? Whether you're an investor or homeowner, we know how important it is to find the lender that suits your unique situation and with the best rate. If you've not compared your home or investment loan in the last 12 months, you may be able to cut your repayments today with a different lender. That could mean more money in your bank account and less stress when it comes to paying your loan. Find out why more borrowers are turning to Finni to refinance their home loans. Call us now on 1300 002 023 and find out what you could save, or visit our website finni.com.au to book an appointment.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hello everyone, Grace Ormsby here and welcome back to a brand new episode of the Smart Property Investment Show, the podcast by investors for investors. And we are so excited to be bringing you today another investment story. These are the bread and butter of what we do here at the SPI show, and it is so important, we feel, to be showing you the stories of real life investors out there, warts and all. There's going to be some good things, there's going to be some bad things. And so it's an absolute pleasure to be welcoming onto today's show our guest, Brendan Lowbridge. Brendan, welcome to the show. Thanks so much for taking the time.
Hey, Grace. Yeah, thank you so much for having me. I'm pumped to be chatting about it. It's really cool. Normally, it's just great. I'm excited.
Brendan, I know that you do love property, and that's something that we're going to be exploring a little bit in this episode. But before we get to all of that stuff, can you just give us a snapshot of the actual size of your portfolio to give people a sense of how into property you actually are?
Absolutely. Happy to do that. So, at this point in time, the portfolio looks like this. So my wife and I have got our primary place of residence, which we're really happy with, and we've been able to pay that off in our early 30s due to property investment and other strategies we'll talk about. We've also got 2 investment properties each. At the end of 2021, I saw an opportunity to sell 3, so I did sell 3 there. And I've got also 3 others that are in sort of transition, which we're adding value to at the moment. So I'm not sure exactly what the total is there. I sort of break it up at any given time. So we've got sort of 5 properties, my wife and I, that we're holding, and we don't see any change there. And then we've also got 3 properties that essentially I own with some other people as well, that we're doing some pretty cool sort of development stuff, which I'm sure we'll get into.
There you go. It is going to be a really exciting episode, and I can't wait to dive into all of that stuff. But let's start from the beginning, Brendan. Going back probably a few years now for you, what was it that really, got you excited or thinking about property in the first place? When were those seeds being planted?
Well, like many, I was sort of in school and, thinking a little bit about wealth creation. I was lucky enough to get introduced to different things along the way in those earlier years, like, the old classic Robert Kiyosaki, Rich Dad, Poor Dad. I got dragged along by my best friend at the time's father to some Anthony Robbins conferences, one of which in actually San Diego. I was very fortunate to go there. Not that they were talking about property, but I think just making you think a little bit different, thinking about what you can achieve. And one thing led to the other, just started sparking a bit of an interest. I did see property as a great vehicle, and one that I slowly but surely felt that I could understand. I just gravitated towards it. Out of school, I went and got my real estate license as soon as I finished school. I wanted to work in property originally, probably before I thought about serious investing, and actually fell into a job with, at the time, New South Wales' largest private property developer, and worked there in the sales and marketing, and actually it was great because I whilst I wasn't thinking about it, got exposed to some pretty cool stuff that they were doing, and that just, I guess, ignited the spark.
There you go. And I'm sure there's plenty of people. It sounds like you've just had some great mentors, really. Plenty of people along the way that have shown you what investment in property can do. Are there mentors involved in that? Are there people that you do talk to about this journey?
Yeah, that's a really good question. At the time, I don't think there was anyone I could point to like many people's families in here in Australia, I definitely had parents that had bought property and done reasonably well. They didn't have sort of a grand, plan of owning numerous properties and using it as a vehicle, but, they had their home and other properties along the way as investments, and it had always sort of served them well. So I think that was probably in the back of my mind, but not a huge motivator. I think it's just the things you sort of learn along the way. And And I'm also, over time, after working for the developer, that, it's changed in the GFC. So things changed there. I got to see that firsthand working for a large developer. As things eventuated and as life changes, I ended up in the mortgage broking industry. And that also was a huge catalyst because I, over time, got exposed to some people that were actually clients at the time that had built some great wealth in property. And if anything, that was probably another pivotal moment to actually see what other people have achieved that were 10, 15, 20 years ahead of me and what they've been able to do, and transform, I guess, their financial future by investing in property.
For sure. So it doesn't sound like, you've always known that property was going to be a vehicle to drive wealth generation for yourself, Brendan, but it sounds like that's where you're at now. And I know that goals shift, goalposts change, what we want from life does change. But at the moment, what is it that you do hope to achieve through your property portfolio?
A great question, Grace. I mean, at the moment, I've actually formed, I guess, we've officialised the process of development, and I've got some great partners in that business, and we've got some really good aspirations to expand that as a business. And as a result, we see the fruits of that as well will enable us to really hold some great properties for the long term. So we're now looking at the different opportunities for commercial properties, multiple units on one title that we'll keep for the long term, and really, sort of, I guess, higher income generating assets that we'll sort of hold and essentially, like a lot of people, earn a great income through holding property. And from our perspective, now getting more serious and into development in a more active way. We think that's a great strategy for us because it will basically mean that we've got income coming through. And as you know, when you're in the business of trading properties, not holding them for the long term, it's not always a good time to sell. And, you look at the guys like, say, Harry Triguboff, who's an inspiration to me. He's got a great model because if he doesn't want to sell, he doesn't have to because he's got enough income coming from his 6,000 odd rental units. And, he just holds on to a whole building if he needs to, and he waits till the market's great and then he sells then. So we sort of look at that as a bit of long-term inspiration and sort of think if we can build a foundation of income generating properties, we can hopefully be as resilient as someone like him.
Yeah, cool. Well, we've still got so much to unpack, and I want to sort of run through your properties and how you've acquired them and even some of the strategies behind each of those individual purchases that you've made. Before we get to the development stuff, we're going to be talking about all that too. But before we do go to that break, just a quick reminder, please subscribe to the Property Investment Podcast Network. Drop a review on whatever platform that you do listen to, and we would love to hear what you think. We always love reading what you guys have to say. Your reviews make sure we keep creating amazing content just like this. So keep up to date with us. Check us out on our social media at Smart Property Investment, and also take a look at the website, smartpropertyinvestment.com.au. We'll be back in just a moment. Welcome back to this episode of the Smart Property Investment Show. We're joined by Brendan Lowbridge, and he is about to give us a rundown of that first property that he purchased, taking it right back to the beginning. Brendan, can you unpack your decision to get on the property market in the first place?
So as far as where it began, I guess is where you'd like to start there. Don't quote me on the exact year, but I believe it was probably about 11 or 12 years ago now, somewhere around that vicinity. I bought actually a property in Jesmond. It was a suburb just outside of Newcastle where I live, right near the uni. For anyone that knows where the university is, the first university, Newcastle's now got 3 others in the CBD, but back then it only had the one university. This property was in walking distance both to Stocklands and to the university, and also what attracted me to the property. And one thing that I really always looked at with property, maybe because of my fortunate background with the first full-time career that I had, was I wanted to be able to add value. I sort of knew that you could do really well out of capital growth, but I also knew that, you could amplify that by being able to add value, even if it was, a cosmetic renovation, and that type of thing. So this property had been riddled by termites. A lot of people would have ran the other way, but I seen a huge opportunity to get in there with some people that knew building and essentially be able to remediate that problem and add value to the property. At the time, I think the numbers were the property was purchased for $230,000 and essentially, renovated and then revalued not long after for $350,000. Those numbers would be very close. I don't know if they're exact, but that's essentially what got me started. And yeah, the journey from there has always been, what can we buy that we can add value to, that we believe is in a good location? The fundamentals are there as far as infrastructure and the other growth drivers, but also how can we get in there and we can add value and make something better and more valuable than when we found it. And that sort of progressed from there.
It's pretty amazing to me, Brendan, actually, that you've had that vision from the very beginning. A lot of people don't seem to have that crafted exactly what they want to be doing with their property investment, or that first purchase might simply be, let's just buy a property, and then it kind of snowballs from there. But you've had sort of these basics in play since before that property purchase.
Yeah. Look, I've got to say, it's hard to think back all that way and think about sort of what I knew then to what I know now. But I definitely think that, when I see people go and buy an apartment in a high-rise building, and, even though, there's people that do well out of that stuff, but there's just so much supply that can come on in some of these locations. To me, there's a lot of risk there. And so, in a location where I did buy in Jesmond, to get, at the time, I think it was 550 square metres of land, 4-bedroom home that could be renovated. To me, just on the research I'd done, I just thought that was a better strategy, particularly with the value add. And that was just sort of the way I thought. So I've definitely views have changed a little bit and definitely developed, but the strategy is still the same. And how can I add value? And if I can get in there and essentially, for round numbers, buy and, spend $100,000 and that property is now worth $200,000 more, for instance. I know I built equity from day one and that obviously helps you progress. So that was sort of always, I guess, the mindset.
I always have to ask, do you still have the first property that you purchased?
That is a great question. That first property, we actually ended up, myself and another person who I actually was doing some work with at the time, Jason, we actually purchased the neighbouring property, developed 8 townhouses there, and I still own one of those today as a rental, a long-term rental. So in a way, yes, but it looks a bit different now.
That's cool. And I guess that's the theme of today's podcast, just going into that development side of things, value adding from the beginning, but then also, taking that step further, which we see a lot of people are really hesitant to take that step, Brendan, but it seems to have come sort of as second nature almost to your journey. Does it feel like that to you?
Look, it's still learning every day. I've got a lot to learn and we'll continue to learn. But, we just did see an opportunity there. The next door neighbour property came up. Similar issue to what I just faced with the first one. I was lucky enough that I'd known Jason and built up a relationship. I certainly didn't have the capacity to sort of go and buy a second property at that time based on where my income was and things like that. So we sat down, we worked it out, and we said, well, look, we'll do it together. And so we ended up doing that. In the end, it wasn't the first development that was completed, but it was the second one in time. And that one actually worked so well that we did the eight townhouses, and in the end, the profit was essentially a townhouse each, unencumbered, which today would be probably circa about $650,000 that is unencumbered and obviously provides a rental income. So it was a very awesome outcome in the end, given what we're able to sort of do with that land.
For sure. I feel like we've skipped a few of the property purchases between the first one and then having this second development. So talk us through, we'll go back in time a little bit again. What was the second purchase after that first Jesmond one?
The next one was one, actually, believe it or not, within about 250 metres. So one thing you'll learn about my story is I sort of replicate what works. I see very smart investors diversify themselves across multiple states and, reduce their land tax bill and do all sorts of cool things and capitalise on different markets at different times. That's certainly not me. I'm sort of a person that sort of likes to rinse and repeat. Created a fantastic team as far as architects. Builder was a critical one to me. I did a lot of research and got a good builder early. And so, believe it or not, the sort of initial due diligence that we started doing on the property I just mentioned just led naturally to looking at a property not far away from there that actually was an existing property, also in Jesmond, an old home. I believe it was about 1,100 square metres, and we saw potential there. So I guess, again, it had been sort of the ignition had been lit, and I guess we sort of thought, you know what, we've done some research now, we think there's an opportunity, and that was sort of the next one that followed.
Okay, so with that second property, did you take the chance to value add to that one straight away too?
Yes, because the initial research had started and we sort of put together a bit of a formula on what we were going to do. And it just happened at the time that this one actually came up with an approval in place for a development. It's smaller than the one that I mentioned that we ended up doing on the first property I purchased, but it had essentially a development approval in place. And the strategy there was actually just to amend the existing approval and essentially, turn what was a development of townhouses into, rather than 2 bedrooms, into 3 bedroom, which was something that we picked up with our architect was possible. So we've seen it as too good of an opportunity to pass up. And before you know it, we've gone from, I've gone from having an investment property and thinking it was going to be a renovation and that was it, to sort of building, a small little pipeline of sort of projects to work through, which was really exciting.
Just to give us a bit of a sense of a timeline, Brenton, do you mind sharing when this was, what year you were going into some of these properties in Jesmond?
Absolutely. So I believe, we go back to, I believe it was about 2010, and it might have been give or take a little bit around there. And there was probably about 12 months between 1 and 2. So the renovation was done. Again, I didn't have any plans on, so essentially it just sort of naturally unfolded. So, there's all sort of that little sequence where there was a property, another one 250 metres away and next door. I don't want people to think that sort of all happened in a month, because it certainly wasn't like that. The first probably 3 months was really spent on doing renovations. And I actually remember, like tenants that lived there, because it was such a badly upkept property. And there was actually dirty nappies. It's pretty disgusting now, but there's dirty nappies that were just left like in living rooms and stuff. And so I was in there, helping tradespeople where I can. So it was definitely, that's a bit further on and a little bit of a shift to where it started. But it started as just a renovation, and then further opportunity came up very close, sort of in the following 12 to 18 months from there.
So moving on to property 3, because I do feel like we keep kind of circling back around. By this point, you were obviously very heavily invested in property investment. It's probably safe to say, even at that point, you were looking to value add, you were even starting to think about developments. Where did you go to from there?
So essentially, within that period, if we just sort of look at that as a period in time, there was essentially the 3 properties then at Jesmond that were sort of purchased within that, call it 18-month period. And then the focus was really to sort of see those through, because at the end of the day, it was a leap of faith. I believed that I had a certain level of knowledge around what was going to happen, but I obviously hadn't delivered a project. So that became the focus. It wasn't sort of about growing and growing and growing. Certainly at the time when the project started to commence there was the opportunity to actually buy property in Wallsend, which was sort of at the later end of the first project that was delivered. And then that was when I was comfortable to sort of jump into that. So it was definitely a progression. It wasn't sort of in quick succession like it may sound like on the podcast, but that was sort of, I guess, that era, if you will, of sort of, I guess, transforming from what was originally going to be a renovation to then deciding, hey, there's actually better returns that can be done by doing small developments.
Everything's always going to sound faster and quicker and easier when we're condensing it all into a 30 to 45-minute podcast, isn't it, Brendan?
Absolutely, it certainly does. And the same in the seminars. I went to all the property seminars you could ever probably talk about, and I love them, and I think they're great information. But I think one thing that often people walk away and see it as like, your whole life's going to change in 12 months. And a lot can happen in 12 months, but if I look back, I definitely probably at times overestimated 12 months and underestimated 10 years. And that's probably why it's awesome to look back. But yeah, it's been well and truly more than a decade sort of process.
Were you working full time at the same time you were doing all this? Because I imagine that would have taken up a fair chunk of your time.
Absolutely. So I was working and I was also doing university. So I was working in a brokerage and I was also studying university as well, studying finance and economics. And I was just running around like crazy. And I remember, sort of running from university to meet builders and then meet a client. And so it was definitely an interesting time. It was a lot of fun, and it was probably, at the time as well, I sort of realised that there's a lot of fruits in obviously property and what it can do. And I guess as well, that probably formed a lot of my sort of thoughts around what I was going to do for a career, because I wanted to be in a position that if I had to go and quickly meet an accountant or a solicitor, that I sort of had some flexibility in my role. So I guess I finished university and then sort of thought, hey, this is a really important focus for me. So I need to make sure my career allows it, even though, for a lot of finance graduates, the pull might be to get into a big bank or, chase the big corporate salary and things like that. So it definitely was probably a focus and what sort of helped lead me into my career today.
And you must have been reaping some kind of rewards from the properties and looking at these developments at that point for you to go, yeah, there's something in this. This is definitely viable for me moving forward.
Absolutely. Like you could see where it was going to go. I mean, for the first 5 projects I did, I'd never sold everything, which meant that there wasn't ever like the great thing, with a lot of developments and what a lot of people think about is like this big amount of cash that comes in and it's all great. But I never, probably one of the things I say to people when they talk to me about property is that I never spent any money from property that I invested in or sold, if that makes sense, because I didn't sell. So what I mean by that is I only ever sold enough, to basically then keep something at the end of the project. And so that was my profit. And so I didn't actually see the amounts of money that probably people would be doing in a similar development. I actually just held on to property at the end of these projects. And so whilst I could see it, I was dedicating a lot of my income at the time into getting these off the ground. It wasn't necessarily giving me an income back as such in the early days. It was probably exhausting my income, but I knew that the benefits would be sort of long term.
Yeah. So do you think it was important that you did take that route and hold on to things, even though it was causing that drain on your finances at the time?
Absolutely, Grace. And I take the same view today with investments. So my investments are there to grow for the future of my wife and I and our son. It's not really to provide a lifestyle at this stage. Now, if it gets to a point that we talked about it earlier where, there's enough income there and that's great. And that means that I can possibly slow down a little bit in other areas that produce income, well then, we'll assess that then. But at this point in time, everything that we sort of get out of our investment journey is to sort of compound into more wealth for the future. We don't sort of go, oh yeah, great, we've done something successfully, let's sell that and buy a new boat. That's just never been our mantra. We live a good life, but we sort of go on holidays and things like that on the income that we earn day to day, rather than using our properties for that.
Yeah, good on you. So between now and 2010, Brendan, there's probably been a few more developments that you've been involved with since then. There's probably not necessarily a point going through every single one of them, but have there been any high points or even has your strategy stayed the same? Have you stayed local to that Newcastle area when you've looked further down the track?
Absolutely. So, yeah, Newcastle and also Lake Macquarie councils, for those that are familiar, has been the predominant councils, really the only councils I've worked in for this. And again, it's where the team are all, when you think about it, you've got so many people, from multiple engineers to town planners to architects to, surveyors to certifiers, the list goes on. There's probably another 4 or 5 that I haven't even mentioned there. So you build these fantastic relationships with people over time. So that's what's worked. It may not be what obviously only happens into the future, but that's what's worked. And so we've remained local. So there has been obviously, the downside of that is, as I mentioned before, there's land tax implications. I know there's other markets right now that are certainly doing better than Newcastle and Lake Macquarie. So, there's investors that benefit from that. But I also do believe the specialisation and the ability to add value. And, we sort of are at the point now, as I mentioned, I've sort of solidified it with 2 great partners that I work with now. So Ryan is actually a partner at a large real estate firm here, and Kurt is actually a director of a really great building company, an award-winning building company. So we've sort of joined forces and skill sets. And so I believe between the 3 of us now, we're pretty well poised to see an opportunity. And because it's what we all know, we can move pretty quick when we see something that's of value. So yeah, we've got some exciting things coming up now, and I don't know if there's anything in particular you want me to expand on, but there's certainly a few things that we're working on.
We'll go to a break pretty soon, Brendan, but before we do, I would actually just love to quickly break down, because you mentioned that you and your wife both have some properties, and then you've obviously got the developments as well. How does that split actually work, or what does it look like sort of in real terms for people?
Absolutely. Okay. So how that looks. So for us, we've got, my wife has the 2 investment properties which are in her name, which is great. Interestingly enough, one of those properties is a property from a duplex that she actually did on her own, and that was fantastic success. And she kept one and sold one, which was brilliant. And
we'll have to get her on the podcast too then.
She'd love that. She loves this stuff. So she does really well, and she's got another property which she has rented, and she's looking at opportunities at the moment for a granny flat to get a dual income out of that property, which she'll just hold. And the idea for her is hold those, let the current rental income repay the mortgages over time, and essentially hold those for the long term. The 2 properties that I hold are actually properties that are left over from projects again. So the one I mentioned, which was one of the projects way back when that I completed, and so it's a townhouse that is held, and there's also another one in the suburb of Spears Point where we did sort of 4 high-end townhouses and kept one in there on completion as well. So that's the 2 properties that I have. They're both new. They're both townhouse product, and that's simply because that was the project that was done, and that was sort of what the strategy was, is to keep at the end.
And then you've got your principal place of residence that you have together.
Absolutely, yes.
Yeah, cool. Oh, there's so much going on. I definitely need to get your wife on here then. It'd be interesting to hear her side of the story, that's for sure.
Yeah, definitely. She can pick me up on things I've missed.
We're going to take a quick break there, but we'll be back in just a moment with more from Brendan Lowbridge. Welcome back to this episode of Smart Property Investment Show. I'm joined by Brendan Lowbridge. Brendan, it's been really, really insightful to chat with you today. I'm sure our listeners feel the same. It's great to hear that development perspective and how people can really, I guess, sink their teeth into that side. We hear about property investing and, just going one for one and what you can be achieving there. But the value add that you've managed to achieve in a fairly short period of time is pretty incredible. So you mentioned before the break that you do have some exciting things in the works. And I don't expect you to be, sharing that all with our listeners today, but what are some of the things that you are sort of looking into? Is it an expansion of your horizons? Are you looking further afield, or is it bigger developments? What do those next steps look like?
Okay, so again, with the company, it's all been formalised now. So if anyone wants to check it out on Instagram, it's Parvia, Parvia, and that is actually a amalgamation of my 2 partners and I, our first child's name. So that's how we came up with that when we decided at the pub that we'd make a go of, instead of each of us all running around and doing similar things, we all had similar backgrounds, different careers, but similar property aspirations. We hit it off and we said, let's formalise this. Let's, create a brand and do it together. And so, we put our first child's names together, blended them, and over a couple of beers, the company was born. And, so today, the pipeline of projects, I think, is around about $17 million of projects that we've got to deliver over the next 12 to 18 months. Now, that ranges, but the main thing I think I'd say to the listeners today is what I've been able to do over time is just focus on what I consider much more blue chip areas. So what's exciting about where we develop now is we're really targeted around, we believe there's just such a huge demand for downsizers to downsize to something that's beautiful, that's aesthetically pleasing, that, is well thought out and well appointed, close to where they're used to living in their community. So we're really looking for opportunities where it's a blue chip area. There's a strong value in the existing property stock, meaning that, they've got the changeover so they can, sell a property. If I use, Merriweather, for instance, we've got a fantastic project we're working on there. And, these properties will sort of be in sort of the range of 2.6 million and beyond the sale value. This is a duplex, two detached homes. But, there's people in Merriweather that can sell for, we've just had a property that just traded for 10.25 million in Merriweather. So there's a huge amount of value in existing property there. But, people who have maybe the larger home and all the maintenance that comes with it, and they want to unlock some of that value for their retirement, they can sell something that's much bigger with more maintenance, come into something that's beautiful, still, walking distance to the shops, the beach and everything else. And so that's the specific market we're trying to tap into and understand. And we believe we're doing a good job at that, but we're now focusing on those areas where we can serve those downsizers. So the projects at the moment are all based around that.
I can tell that you've really figured out and carved out that niche there, Brendan. And a lot of people take a really long time to achieve that. So kudos to you and the guys that you're obviously working with for working that out. I feel like it is a really important time, especially we're seeing changes in the property market, but it doesn't sound like you need to really be worried about what the property market itself is doing because you're sort of operating outside of that lens. Is that kind of a fair thing to say?
Absolutely. I mean, look, it's a fine compliment. Thanks, Grace. I mean, we just see there's a huge amount of baby boomers in this country. We know that they're transitioning. So we know there's, they're going to be looking for somewhere to go. Yes, there's a lot of density, say, for instance, in the Newcastle CBD that's coming on. We've got the privilege that Ryan's very highly skilled in what he does. He gets a lot of buyer feedback through him and his broader team in real estate. So he sort of knows. Everything that I've learned is that most downsizers, if they're used to a certain community and area and have their associations, they don't necessarily want to uproot and sort of go live in a small apartment in the city. So we think that, call it that townhouse, or freestanding home sort of, but, low maintenance product is fantastic for them. And so, yeah, we've carved it out. I mean, there's certainly risks and headwinds. I mean, I've had that thought in my mind for a while and have done a project in the past that was targeted at exactly the same market. And, when the market's really tough, you do have times, Grace, where these people don't want to sell their home because they think, hey, my home was worth $3 million 6 months ago. Now agents are telling me I'm going to get 2.7 if I'm lucky. And then so sometimes, you're going to have people that aren't going to make that downsized decision while they don't think they can get what they want in their home. So for the most part, I think it's a deep market, a broad market, and it's a very wealthy market, which is, who we want to be selling to. But at the same time, it does have its risks that if, they were in a position where they didn't think it was the right time to sell, well, we sort of need them to be comfortable with that process. And obviously, them selling is obviously normally a requirement of them buying from us.
Plenty of food for thought there for our listeners. And you mentioned the things that you've learned. So it would be remiss of me not to ask some of the lessons that you have learned over the last few years, Brendan. You've obviously done a lot in the space. I don't want to say a lot of people learn by trial and error, but are there things that you have done that you go, maybe I wouldn't do that again, or any mistakes that you've made that you just know now not to make those? What's it been like?
It's a really good question. I'm going to just touch on something that I was probably lucky that this happened, and I've seen many others go the other way, and I've seen terrible outcomes. So I'm not sort of saying that professing to know it, but I did a lot of research early on builders and actually interviewed people that had used the builders that I was looking at using. And I actually didn't just go to their references because like anything, it's like a job resume, right? You're not going to put a bad reference on your resume. So I actually just went and sought out people and, drove to building sites and, found owners in the past. And so I really got a great in-depth view of a lot of builders. And I actually just was fortunate that I just picked such a great builder early on and was able to strike up a great relationship with them. And in the space of development, particularly when you don't have a building background, which has changed a bit today because obviously we've between us, we've now got that skill set. But at the time, that was all so unknown to me. Like I was from the finance world, but, I didn't know what a soffit was or architraves or skirting or all these sort of, terminologies that builders just throw around and you're like trying to follow what they're saying without looking like an idiot. So having someone that I trusted was just a fantastic thing that I fell into. I subsequently seen people that were doing similar things to me shop around and often go for the lowest quote and, just have all sorts of issues with variations, with time delays, with, so for me, that has been absolutely one of the keys that's made this ride not always smooth, and we can go into maybe some of the pitfalls, but definitely a lot smoother than it would be to, some people I've seen, have court disputes with builders and every invoice is, going from the builder to a solicitor to the client, all sorts of, really, really disruptive things that can happen in a project if you don't have a great working relationship with a builder.
How come you had the sense to do all that, to do that kind of due diligence if you've admitted that you didn't know anything about the building sphere, but to go, I actually need to, do some extra homework here and find out if this is okay?
Look, that's a great question. I don't know if I've got an answer for that that's going to make me sound intelligent. I think that really at the time, if I think back, that to sign a contract maybe of about roughly sort of call it 1.2, 1.3 million, which wouldn't get you a whole lot in construction terms today, the prices have changed a lot. But that was a big contract to be signing on the dotted line for. So I knew there was a big responsibility in that, and I knew that with my limited knowledge, I needed to fill some gaps. Which again, I believe we've done that really well now by partnering with complementing skill sets. So we've got that in-house now, which gives us a really good advantage amongst probably other people that are doing things at the scale we are at the smaller level. You go to the bigger level, and normally there's normally a strategic alliance somewhere with the builder. But then that just wasn't a thing. So I think I just had to do that extra due diligence. And it was at a time as well where when you're getting started, you don't have hundreds of thousands of dollars of surplus sitting there if things go wrong. So what was really, important to me was to make sure that, the builder that I was working with didn't have a track record of making margin through owner variations, which unfortunately a lot of them tend to do. Not a lot, but the ones that do that, that's a risk. So don't know if that helps, but that's sort of how I was thinking about it.
I think it does help everyone here. And I think it's just a good reminder as well. Make sure you're doing your due diligence. Sometimes it does feel like, it's so easy to get caught in that trap of wanting to pay the lowest costs, especially in this environment where we're seeing, as you mentioned, construction costs going up so much. Before I do let you go, you mentioned pitfalls. And I also feel like I need to ask you about them. Is there any, were there any hiccups or anything that's gone on down the track where you've gone, what am I doing this for?
Maybe not that thought exactly, because it has sort of worked out over time. Look, in reality, you're always going to have obstacles when you're doing things like this. There was never one particular one that made me think I didn't want to do it again. If I sort of look back and I just say anything, particularly for people that are doing, like these value add type strategies and development, like I really bought way back, when we talked about, at Jesmond, based on fundamentals that, I thought were really strong. I've just got a different view on, capital growth and things like that now. So, it's easy to say now, but I also didn't have the capability to do it, but, at the time you buy where you think is obviously the best location for your affordability. I mean, if I'd had the ability back then to sort of buy in some of these blue chip areas that we're in today, like for instance, we've got projects in Warners Bay and New Lambton, it just would have been fantastic. That to hold a property over that same period that I've held a property in Jesmond in one of those locations would have been a completely different ballgame. And I wouldn't trade any of it, but you look back now, and if there was a way to make that possible, and there's always a way, you just got to find out how, that would have been a game changer as far as the hold properties that have been held. So, if I could say anything to anyone is, think about how you can get into those best quality locations that have a really strong track record of capital growth, because in 10 years' time, it's really the growth that sets you up. It's not, the extra $30 a week in rental income that you may get out of, say, in this instance, being, close to a university, but not sort of being close to the inner ring of Newcastle, for instance.
Hindsight's a wonderful thing. Hey, Brendan.
Yeah, it is. But it's all fun. You just got to take it for what it is. And, it's just the journey.
It has been wonderful to chat with you today and chat through this journey, Brendan. We are coming to the end of this episode, but I do feel like this is a conversation we're going to have to pick up down the track, especially if you've got a few more projects underway at the moment. But thank you so much for your time and imparting some of your knowledge. I really do think our listeners can take things away from this and apply to their own investment journeys.
Thank you very much for having me, Grace. It's been a pleasure and really great to talk about property. It's a true passion and I've enjoyed it. Thank you.
Before we do go, remember to follow us on our social media channels, Facebook, Instagram, and LinkedIn. You can also find more information there about our latest podcasts, events, and much more. Smart Property Investment, our property investment podcast network, wherever you do listen to your podcasts. Until next episode, stay safe and well wherever you're listening from. Bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Have you signed up to HR Leader? Go to hrleader.com.au to subscribe. Receive the latest HR and people leadership insights and news.